Right, welcome back. Thanks for staying with us on the AM edition of Newsfeed. I'm Mpho Sithole. Let's give you a sense of how the markets are faring. The local bourse is expected to benefit from higher Asian markets this morning, with a sentiment boosted by economic data pointing to a U.S. economic recovery. The rand was slightly weaker against the dollar in early trade, with easing inflation fears in the U.S. putting pressure on that currency. For a look at the latest market moving news, we're joined now by Bianca Buertas, Executive Director at Citadel Global. Bianca, very good morning to you. Always a pleasure having you on the show. The rand was slightly weaker this morning. Is the rally over? Let's give us a sense of some of the risk elements that could put an end to the rand's recent rally.
Good morning to you and the viewers at home. The rand has performed significantly well over the past couple of days. We've actually seen a rally of 6 consecutive days. And basically what we are focusing on quite significantly is the U.S. economic recovery, inflation data coming from the U.S., as well as the subsequent Federal Reserve monetary action. Currently, should we see a pullback in liquidity, so tapering down of quantitative easing by the Fed or increasing of interest rates, we could see the rally of the rand come to an end. However, we are only expecting those type of movements from the Fed towards the third and fourth quarter of this year. So in our opinion, there is still quite a bit of room for the rand to continue its strengthening move. However, we might see it slow down momentum-wise.
The focus today will be on the U.S.'s personal consumption expenditures data for April and the U.S. Federal Reserve's preferred measures of inflation. The consensus is for an acceleration to 2.9%. Take us through what the market sentiments are in this regard.
While markets are expecting inflation to accelerate, we need acceleration of inflation in the U.S. on a sustainable basis above 2%. The Fed will wait for employment markets to reach close to full employment, as well as inflation to remain above that 2% mark for a significant period of time before they will start actually making noises of tapering down, as well as rising interest rates. However, they have started the conversation, so markets keeping a very keen eye on that, but in all likelihood we'll only see results of that at the Jackson Hole Symposium in August.
And the National Treasury has released its zero-based budgeting methodology. What were your immediate thoughts on it? Do we have the capacity to implement it effectively? So
just for a bit of viewer background, basically a zero-based budgeting model means that we're not looking at the previous year's numbers and making adjustments to those. We are actually getting every single department to motivate every single line item expense. This could actually benefit us to deploy capital where it's most needed in the country, where it could contribute to the most effective economic growth. However, with South Africa struggling in quite a few departments, it will be very difficult for us to still take the funds that we have available to us and distribute that fairly amongst all divisions. It's quite time consuming to actually get through all the line items and the motivations from each department. But I do think that if Treasury puts their minds to it and actually puts in the effort to rebalance the budget, that South Africa can benefit from that.
And the petrol price is set to drop slightly next week. Is this some reprieve, especially considering the constraints currently faced by consumers?
Yes, the South African consumer remains under quite a bit of pressure. We've got significantly high unemployment rates, and transport is one of the biggest contributors to expenses for the South African consumer. That decrease in fuel prices will definitely benefit the consumer. However, we will continue keeping an eye on increasing oil prices as demand globally picks up once again, and then obviously also keeping a close eye on any weakening of the rand that could also eliminate any decreases in the fuel cost locally.
Right, thank you so much for your time. Let's leave it there for now, bringing you up to speed with the markets. Bianca Buertas, Executive Director at Citadel Global.